jobs. Let's talk to Mr. John Ajarian on the line from Market Rebellion. John, what's up, sir?
It's all good, Oliver. Do you hear me okay?
I hear you good, sir. The market, I don't
Fantastic.
know, is it hearing the message about jobs? How come we're not ripping on this? Things seem pretty good in the United States of America.
Well, and they are pretty good, but as you saw and as you've been discussing, we had people looking at things like, well, the president's talking tough about Iran again. And so, of course, Brent and WTI, West Texas Intermediate, both went up. And they went up, of course, because what if there's some sort of a disruption in crude oil transport and or production out of that segment of the world, that section of the world? That would be a negative. And it didn't take much. I mean, we were up 200 and some odd points, flipped like that, and now we've gone right back to the upside slightly, not the same, but yeah, I think it was a great jobs report. It certainly gave people a little bit more to digest after yesterday's retail sales numbers. We're talking about a different sort of economy than the one that today's job numbers describe.
You know, the moving crude, I'm glad you bring up, John, because there is a pretty interesting chart situation developing in WTI, which has been in such a reliable long-term downtrend that anything that threatens to violate that downtrend gets very interesting to me. I think it definitely fits the commodity trade that we've seen in the metals. It's just crude has been very slow to pick up because it's got all the other forces of U.S. production behind it that keep price subdued. But when I look at the chart, boy, it could get really interesting if it breaks 65 bucks. It feels like the last time we did that, we had a range all the way up to high 70s, maybe 80. I think that's something that could be possible if we start pressing the right geopolitical buttons.
I think it would be beyond that. I think we would need true disruption, not just
Me too.
not just these
Not
discussions.
just saber rattling,
And
yeah.
Yep, that's well put by you. Saber rattling. These are, threats. They're certainly. I think Iran pays more attention to the president and his threats because of what happened, both with the attack back in December as well as the what went on in Venezuela. So he's not a paper tiger, but he does rattle that saber or get people all excited, and then it usually just goes right back to normal pretty quickly.
Yeah, it's a usually pretty reliable rip to fade in crude. I would say among so many assets, it is a very reliable one over the last several years. I mean, I'm looking at the 3-year chart, the thing just every time very reliably dips off. And I think that's been helpful too. I think one of the biggest stories economically of the last decade is the U.S. leading on production. So it makes sense that there is kind of a call constantly being sold here.
Yeah, and I think it's not the little boy who cried wolf. It's not, oh my gosh, there's going to be a massive disruption. It's just people price in. They use their modeling and they basically say, well, if this lasts more than a few days, maybe we see $3 or $4 worth of upside in crude, and then we better be ready to hit the exits pretty quick because the rhetoric will be toned down and so forth and so on. Is that what I'm anticipating? Yes. So I saw a bunch of back and forth in options on Exxon Mobil and in
Okay.
Chevron that would, of course, tend to react rather quickly to
Wow.
something good or bad out of
I
these
guess I didn't even
discussions.
realize what was going on with Exxon, John. I've been sleeping on that one, I suppose.
No, I
Holy
don't think you're
smokes.
sleeping on it.
I missed
But
this one.
yeah, it's always interesting. I was watching Royal Caribbean. When you look around at some of the largest places, the largest users of fuel oil as well as gasoline and Jet A, the cruise lines are right up there on the top of that list. And then airlines, of course, whether it's United, UAL, or whether it's American Airlines, whether it's JetBlue, any of those, you would expect that when crude rallies, those would go in the opposite direction. And indeed they have.
Yeah.
Again, United, I'm showing it down 2.5% today. A
Yep.
volatile session, certainly, but not a session where the whole market's heading lower. It's a few stocks in the Dow, NASDAQ's verged, and the S&P was up 5 just when I came on air with you.
I kind of like the idea of being long a United, which was just at highs, or a long Royal Caribbean, which was not quite at its highs, but in a multi-month uptrend, is a way to kind of fade the possibility of crude breaking out. Because when I look at the jobs data today, I look at the consumer spending number that was in there as well, and I look at what these companies offer, especially the cheap cruise. That's been one of the favorite ways for folks to indulge over the last 5 years.
Yep. It's been for consumers that have internal combustion ice. Nobody wants more. All engines versus, and with it, that is the input that of coming down in price rather dramatically in the last 12 or 13 months since the president elected. I think we've got issues where people would like to see crude oil continue lower, and they're likely to see that after a little bit of this, again, as you said, saber rattling.
Yeah, I'm kind of in that camp too, where generally whenever it looks like crude's about to do something big and bullish, it doesn't. However, the chart getting pretty interesting with this kind of like ascending triangle, if you will, that's been going on for some time in crude oil. But $65, we'll see if it breaks through there. John, a lot of people are watching the cloud and the tech companies around earnings. Questions in the chat today about potential blowback in the private equity world because of the software crash. Are you worried that this could become a contagion? There was a popular article going around on X as well, as someone saying this is like the beginning of COVID. Like, I don't know about that, you know? Like, all right, I'm not trying to be a jerk, but, you know, if you're getting displaced by AI as a programmer, you probably had a high-paying job before. Hopefully you got some equity. Hopefully, you know, you can, I guess you got to get creative now.
Right. Well, and creative is never a bad thing. And, you know, Pershing's on, and meanwhile, he's on your competitors talking. He is not overvalued in the market.
Overvalued,
so
yeah. We're losing you a little bit, John, breaking up a bit there.
So,
but yeah, a lot of these stocks are pretty expensive, right?
Yep, a lot of them are, and a lot of them because you saw Salesforce today was getting hit.
Yeah, Salesforce down 4.5%.
Space.
Getting rocked. Hey John, I might rip a chart. You wanna reboot your Zoom real quick so I can get you for 5 more minutes and see if that helps, because you're breaking up a little bit here. But I want to hear the thoughts on the trade for cloud, because you're right. I mean, I didn't even realize that Salesforce was down another 4.5%, just getting rocked. Fresh new lows. I mean, just absolutely obliterated. Now, if you look over the past 1 year, Salesforce down now 43%. So just absolutely brutal there, as we see cloud being the, coming off the chopping block in a very real way, being on it rather. IGV down 20% over the past year, also a pretty rough one. If you take it from the highs, IGV down 30%. Kind of interesting if you zoom out on the chart for IGV, still have this uptrend that's holding on for dear life, but obviously breaking here as we see the whole group come under some pressure. John, the potential for this uptrend, I'll try again here, for IGV, you know, the ETF that has a lot of these stocks in it. It's hopeful, but this is kind of the point that I was making, is a lot of these stocks are up a ton. And I know that's what you were saying as well, is that a lot of these were in the more expensive cohort of the market.
Yep. And people were justified to basically be nervous about those stocks and the valuations. And you and I talked about it when Dr. Burry was basically at the end of his rope before he basically exited some of his hedge fund practice. He was just early. Was he wrong? No, but he didn't give himself enough time to be right. And that's one of those things, Oliver, that when you're trading options, you do have to be cognizant of, okay, when is my projected move for, is it because of earnings, or is there a big conference? What is the reason? What is the catalyst for either upside or downside? And then give yourself enough time to be right. I think the number one thing that people fail at, whether they're trading at CBOE global markets where you are or any place else in the options world, they don't give themselves enough time to be right. They want to trade things like zero DTE, you know, 0 days till expiration options. And for the most part, there are very few of us professional traders that would say that that's a good idea. It's not for customers to be in there trying to manage a portfolio of very fast expiring options, whether they're zero DTE or whether they're just 3 to 5 days. You want to give yourself a little more time. And some of the best of us haven't done that, and Michael Burry was part of that.
I think, too, if you're trying to bet on structural change, you kind of by nature, that doesn't happen in a day, you know. And
Right.
if you're thinking that these sell-offs also are creating longer-term buying opportunities, we talked about this with Pete yesterday, which I thought was a really good point, which is a lot of these companies, not necessarily the software ones right now because they're the ones being disrupted, but if we look at like an Alphabet, for example, that's been a big winner and pulled back around earnings. Maybe not the best example because it didn't come off too much, but a Meta that's off the highs, a Microsoft that's very deep off the highs. Microsoft's kind of one that sits in between, right? It's like it's spending on AI, but it's also has AI competition. But if you believe the stock is...
You don't need to look further than Oracle, my friend.
Okay, there you go. Okay, there you go, yeah.
You look at Oracle from last
example.
August when it made that 35% move, and you look and say, oh my gosh, you know, the 52-week high is almost $350 a share. It is almost $200 under that right now. So when I look around, I say a stock like Oracle at these levels, to me, I'm just waiting for somebody to get an itch and start buying a lot of calls, and I'm going to be right with them.
Yeah, and that's where if a stock is hit because they're spending too much in CapEx, the market says they're spending too much in CapEx on a business line that's been proven, that's a long-term bet they're making. So if you're going to be trading it, you also have to have that in mind, right? That's going to be something that takes a while, to your point about not being afraid to own premium, which it seems like in time, rather, not being afraid to own theta as well.
Right, I agree with that. And obviously, people, when they get nervous, something a lot of people really understand, then they go for things like, look at this Generac move today.
Yeah, we were just talking about
Generac,
that.
I mean, just from a generator. I'm not making fun of great business, and obviously where I live in Puerto Rico, virtually everybody has one. The grid is down here, but the ability that these guys use endorsement Generac and this big, I mean, at the was $140. $240. That's
yeah, literally from the low of 110 in April, doubled, kind of out of nowhere. Love it. Like the thoughts on the tech trades and the message on the long-term options. Appreciate it, John. We're going to get you a Generac backup for your internet out there in PR with the storms hit.
There you go.
You the man, though. We got the message through through the chart. Appreciate it, John.
Thank you.
You got it.